Welcome back to Asset TV's View from the Floor. I'm Gillian Kemmerer, joined once again by Peter Tuchman, senior floor trader at TradeMas. Great to have you on today.
It's good to be back.
And, I think we have to start with the CPI print. Came in a little hotter than expected. We've taken off the conversation around March, but what bearing does this have on May?
Look, the whole conversation is so confused because, at his last meeting, right, it was clear that he took March off the table, okay? And I wasn't sure March was on the table, right? In my opinion, I thought we were going to be probably April or May. And so I found that curious, but obviously the expectations of the market, because that day we did sell off quite radically on that news. Like it was a big surprise to everybody. Okay. And then we've seen, and it's funny, how expectations are a big part of what moves the emotions of the market, right? That 3 number, right? So we're coming down. It's also important for us to really look at where we've come from, right? 9%, 8%, down to 3, right? So everybody was really looking to break below 3. Right, looking, I guess, for 2.9, where everyone's expectations were. And it came out 3.1. So there was a great headline yesterday. It said, hot CPI number pours cold water on the market. And it really did. I mean, it was a fast, furious reaction. And I think it was, we're talking about tenths of percents. And how significant is that? And I guess it is. If the market responds that way to it, I love to say the market does what it wants to do. It's telling us what it thinks of the information. Right? What tenth of a percent, is it that significant? Well, I guess it's a number, a milestone in people's heads that is significant. We did get up to S&P 5,000. We actually got up to 5,039, I think. We broke through it. We stayed above it for a couple of days until this number came out. And there were such huge expectations around the CPI number. So when all eyes are on it and expectations are there, the market tends to get super emotional and react to it. Is it going to have an effect? I'm not clear. It may. It may in May. It's hard to know what Jay Powell does. And, look, I know his decision. They always say that in the meeting and in the news, in the press conference afterwards, that it's a data-driven, data-based decision. And so I think we've still got a number of other numbers that are coming out between now and then that will give us a little more. How broad is this number? How significant is the number? How does it break down overall? So I think it's yet to be determined.
Futures markets baking in about 92 basis points in cuts, but that's down from 150 from a month ago. Is this a case of the market that got ahead of itself and is now coming back to reality?
It's very possible. Look, the market is clearly ahead of itself in so many respects. We're seeing stocks that are, when bad news comes out, the market is not at all very forgiving, and the irrational enthusiasm. And I found out that was a term coined, I think, by Warren, or by, who was it? It was the Federal Reserve chairman back in the 90s or something. Someone asked me the question, was there ever a time where we had high inflation and a bullish market? And it turned out that was in the 90s, before the bubble of 2000. And that was when the term irrational enthusiasm was coined by whoever was the Fed chairman back then. I don't remember what it was. So there's been so much irrational enthusiasm around stocks and around the market. They really wanted to push the market to that 5,000 point, and they got us there. Is there going to be follow through? So yesterday was the big sell-off. It was fast. It was furious. There isn't any follow-through yet today. We're sort of trying to figure out where to go. I'm seeing it in individual stocks too. We've seen stocks like ARM, recent September IPO that came out in the 50s. Nobody liked it. It got down to 35, and now it's trading at 150. So that when the market is almost irrational in so many ways, the way stocks react. And look, these are numbers. It's a numbers game. So when they go up, it's more buyers and sellers, right? But, we're just seeing such exaggeration in the price of the markets, in the emotional reaction to the markets, to news, right? And we've been seeing this for a while now. This is a 2 or 3 year phenomenon. I track the market forensically daily. Stocks moving around earnings, around Federal Reserve releases, and the irrational enthusiasm on the upside, and the painful, non-forgiving market when they don't like a story. Like we saw Lyft, right, yesterday. They came out with it, and this is unheard of. Dan Ives of Wedbush was quoted and said that never in his history has he ever seen a huge mistake like that. I mean, you're talking a 500 basis point move versus a 51, and the stock rallied 60% and then sold off hard on it. So as I say, the market's moves are a bit irrational on both directions. So
you've alluded to it a couple of times, and in the spirit of Valentine's Day, the S&P's flirting with 5,000.
yeah, it's flirting. There you go.
You've got the hats to prove it.
I do. I have the hats to prove it. And we never bring the hats out before we hit the number and close there, right?
Which was Friday, right?
We don't want the big Kavorka, right? You don't want the voodoo coming at it. I'll tell you a funny story. Back around, it was Dow 18,000. And back in the day, there were a lot more people down on the floor. Arthur Cashin and I used to walk around. I would give out hats, in bulk back then when we hit a big milestone, because the milestone seemed a bit more, each 1,000 points back then was a huge milestone. And so, the market came, we didn't close. We flirted and hit 18,000. We didn't close there. I brought out the hat and we did a thing at the end of the day, and the market sold off radically over I sort of broke my rule of ever bringing out the hat before we closed there. The market sold off 1,000 points, and it took us another 4 months before we got back up there. So
wow, so premature hat's a leading indicator that we should be keeping an eye on.
Exactly. The merchandise indicator.
Well, question is, aside from being a nice round number, what do you think the significance of that threshold is?
I love these milestones. They're a psychological milestone. I think it shows that there is, look, matter of how long has it taken us? I think it took a while to go from 4,000 to 5,000. Look, we know that the Dow as an indices is not irrelevant, but it's 30 stocks, and we're trading at 38,000. Look, I think it's important to note that in the eyes of 2023, where we saw, two wars, a major banking crisis, fear of recession by some of the biggest pundits out there, and so many headwinds, yet we came out of it looking really well, right? November was supposed to be a terrible month. We did great there, right? We closed out the year at highs. We're 6 weeks into 2024, and the market, besides 1 week, has done nothing but rally. So, the milestones are important because they show the reality of where the market is in the eyes of a lot of potential headwinds that, there are still doomsayers that are talking that we're going to see there's a guy from Morgan and somebody else talking about the biggest crash we will see coming in March and April. It doesn't feel like it. It could happen. Right. I'm not a predictor. I don't have an opinion on it. Anything can happen. The one thing we've learned over the last number of years, I don't think we've seen a day with less than a 1% move up and down over the last number of years. So anything can happen.
Well, my last question, and the last thing I want to get your take on, is that we're about 3/4 of the way through earnings season. So just in broad strokes, how is corporate America faring?
You know what? It seems like it's doing okay. I don't analyze the earnings, stock by stock. I think, as I said, when they like the story, the stocks are rallying beautifully, and along with guidance. Sometimes there's a bit of a paradox in that you don't know what goes into the release and what goes into the positioning of people in these stocks. You will often see a positive release with good revenues and good guidance, and the stock goes down $30 or $40. And so what's that about? It's buy the rumor, sell the news, right? People have been, look at NVIDIA. Right. I mean, if you look at the chart of NVIDIA, I run an academy where we teach people, me and my partner, David Green, about day trading. And there's a trade called the reversal swing trade, which is when the stock is up 3 days in a row and the RSI, the relative strength index, is above 80, is when you're due for a pullback. And we've seen this day after day after day now for months after month in NVIDIA, yet the stock continues to climb to record highs. So it's a rational enthusiasm. It seems like, corporate America seems to be in okay condition. It's reflected in where the market is. We are trading at record highs day after day. We did have 1 day of a sell-off. We had 1 week this 6 weeks in 2024 that was a sell-off. So it seems like people are putting money to work. I think it's important to note too that there are lots of people who are still in the sidelines. There are people who have been apprehensive about consumer confidence. There are people who, have been worried about the recession that a lot of the big people have been pounding. And so there's got to be tranches of people who are in cash waiting for the market, they're going to be people who are always going to finally throw in the towel and go on buying. And I think that's where we're kind of at now.
Well, it's always great to unpack the headlines with you and see you at 6,000, maybe a little earlier than that.
Oh, yeah, you'll see me before that. Let's hold stable at 5,000 and march higher from there, and we can talk.
Sounds good. We don't want to curse it.
No, we don't.
Thank you for tuning in. From the floor of the New York Stock Exchange, I'm Gillian Kemmerer for Asset TV.